Markets are mixed this morning ahead of key US inflation data on Thursday night. And there's the Easter holidays for many. US consumers are feeling more confident, as are Australian consumers, although renters are much less confident than homeowners. That's coming up in our 5 Things in 5 minutes. And then in our bonus deep dive interview, ANZ data scientist Somayeh Shiri has taken a close look at herding behaviour among foreign exchange forecasters.
In early 2023, January and February, across all herding indices we developed for all our currencies, we saw overly bullish herding in Euro, AUD and Kiwi dollar, reflecting positivity around China's reopening, expectation of lower Fed interest rate and recovery in global growth.
But first, in 5 and 5 with ANZ. Markets are mixed this morning in a shortened trading week and ahead of US inflation data on Thursday night. The Aussie dollar is flat at 65.33 US cents and the Kiwi is up a touch at 60.05. The S&P 500 and the Nasdaq are basically around where they were a day ago, and the US 10-year Treasury yield is flat too at 4.24%. But we did find out more about how US consumers are feeling. ANZ head of G3 Economics, Brian Martin, says the US Conference Board measure of confidence out overnight was stronger than expected, but still consistent with signs of a slowing economy and slowing enough for the Fed to cut later this year.
The numbers are really fitting with what the Atlanta Fed GDP now is telling us, that the economy is really coming back towards greater balance between supply and demand, that growth is running along close to potential levels or just slightly above that. And as a result, that would indicate that underlying inflation pressures in the economy should continue to ease once we get through this bump in the early 2024 data. And I think it all fits with the FOMC cutting interest rates this summer.
Number 2, markets will be watching for Australian inflation data for February, due later today, for any signs of where the RBA goes next. ANZ Australia economist Maddie Dunk is looking for annual inflation of 3.5% in February, with monthly inflation of 0.2%. Now that suggests 0.5% for the March quarter.
That's a little softer than what the RBA has been expecting and really would just add to this narrative that inflation is moderating faster than what we were anticipating. If you take that 0.5% and you annualize it, so in other words, you times it by 4, what we'd be seeing is that inflation would be annualizing within the RBA's target band. So some good news about the inflation pulse.
Number 3, Maddie also watches ANZ's Roy Morgan survey of consumer confidence, which comes out weekly. She points to an improvement last week.
We had the RBA giving off some more dovish signals and also that incredibly strong labour market report, which showed more than 100,000 extra people in jobs in February. So we saw a bit of a lift maybe on the back of some of that stronger economic news.
Number 4, Maddie says one feature in the consumer confidence figures is weakness amongst renters. Their confidence improved sharply last week, but renters are still markedly less confident than those with mortgages and those that own their own homes outright.
Confidence amongst renters has been falling, whereas confidence amongst those people paying off a home loan has started to rise, potentially as people think a rate cut might be on the way later this year. Those people who are paying off a mortgage, they can see some light at the end of the tunnel. They are hearing when they turn on the TV or turning on their radio that rate cuts are likely to be on the way, and that gives them a little bit of a boost in confidence from those very low levels that we've seen over the last couple of years. Whereas for renters, they're not paying off a home loan. So the main issue for them right now is the fact that rents are still very high.
Number 5, ANZ's New Zealand Chief Economist Sharon Zollner is looking out today for the new government's budget policy statement, due at 1 p.m. local time.
We'll get budget 24 allowances and also just a general vibe, a bit of a sense of the risks around fiscal policy moving forward. So, for example, if they were to get upward surprises on revenue, would they spend that or would they bank it? That's the sort of question that we're looking for answers to. So all pretty hand-wavy kind of stuff. We're not going to get any concrete numbers until the budget in May. But yeah, that sort of vibe will give us a bit of an idea of the risks around fiscal policy and its potential inflationary contribution or otherwise, which is obviously going to be pretty key for the Reserve Bank.
Sharon Zollner there. Now, in today's bonus deep dive interview, ANZ data scientist Somayeh Shiri has taken a close look at herding behaviour among foreign exchange forecasters.
Often they ignore their own analysis or information, and this collective behavior can lead to currency mispricing and increased exchange rate volatility.
So how do you measure herding behaviour, and what were your key findings?
Yeah, so we developed several monthly indices of herding behavior among forecasters of Aussie, Kiwi, and Euro. Our analysis revealed that while herding is not a mainstay of FX forecasters' behavior, there are periods when a lot of forecasters start to think the same way, either bullish or bearish about the currency. Our analysis, when considered alongside market positioning data, may signal that a particular currency narrative is becoming overstretched.
Got an example?
Yeah, so a good example is in early 2023, January and February, across all herding indices we developed for all our currencies, we saw overly bullish herding in Euro, AUD, and Kiwi dollar, reflecting positivity around China's reopening, expectation of lower Fed interest rate, and recovery in global growth. The spike in bullish herding was accompanied by excessive long position on these currencies as well. Ultimately, these expectations were proven wrong, but the lift in herding should have made one cautious about projecting anti-USD moves.
So what are the next steps in your research now?
Well, you will see now a lot of reference to our herding indices in our FX publications, so look out for them. And also, we plan to extend our observation to other major G10 USD crosses.
Looking ahead, what are the signals currently telling you about the Aussie, the Euro, and the Kiwi?
So we haven't observed any significant signal recently. However, we run our model monthly and we'll address any finding in our future publication.
ANZ data scientist Somayeh Shiri there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, March the 27th. Catch you tomorrow with the detail on Australian inflation and what that means for the RBA. Can it cut towards the end of the year? This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.